One of the challenges of traders in the market is inability to know how to confirm their entries before taking a trade. In the part 1 of this video, I already spoke extensively on the change of character, the use of change of character as one of the type of confirmation entries. So in this second video, in this part 2, I'll be covering how to use candle formation as confirmation entry. So I urge you to pay a very good attention. If you have not watched the part 1 where I explain change of character as a type of confirmation entries, endeavor to go and watch it. You would like it a lot. So guys, if this is your first time of coming across this channel, I urge you to hit on the subscribe button. And if after watching this video you find value, endeavor to like, share, comment, and also don't forget, most importantly, share this content so that others can also find it. On this channel, I publish content capable of helping any intentional trader to grow. Once you find yourself on this channel, expect to see a positive growth, because the content I dish out, I thought, even though it is free, I make sure it has value in them, that whoever that watches them will be able to apply it positively in their trading journey and have a positive result. So let's dive into today's business. Now, the use of candle formation as confirmation entries is one of the smartest way. In fact, I use change of character sometimes, I use candle formation, but 80% of time I use candle patterns as my confirmation entries. Now, this video is not for total beginners, like I always say. This is for those who already understand their basics. You know what your structure is, you know your structure, you know your liquidity, you know how to read the market, you know your candles, but now you don't know how to use candles as a type of confirmation entries. So this is going to be a lesson to your advantage, so I urge you to pay a very good attention. Now, in order not to make this video too long, I'll be covering just 2 of these candle types I listed here. I listed them so that you can know that we have several types of them. And the Pinbar and the engulf are, one of the major candle patterns that frequently forms in the market. Not all forms every time, but we have those that form majorly. Like out of 100, you will find them 80 times. So the Pinbars and the engulf are always forming frequently in the market, and that's why I have them as my number 1 and number 2. So I'll be covering the Pinbar first for this video, so I don't miss out anything. I'll be covering the Pinbar, and maybe if time permits, I will also talk about the engulf. So the engagement I see on this video will determine if I am encouraged to do other videos to cover the remaining type of candle formations. So if you bump into this video and you find value, do what to do, drop in the comment section that you need videos to the remaining candle patterns. So the first one is a bullish and bearish Pinbar. Now I will just be using one, either bullish or bearish. I'll be using as example why you use the opposite as your assignment if you are a serious trader. So let's go to the chart. Now, when it comes to candles, candle is so important because it is the language of the market. If you don't understand the language of anything, there is no way you will be able to communicate. You will not be able to communicate. You will not be able to understand. You will just be there roaming around. So candle is one of the basic language of the forex market. So once you know what a particular candle is saying, you can read the intention of the market and you can know the move you should make. A candle can tell you either to run or to stay or to be careful or to just observe or to go and sleep. That is how, that's how sweet candle is once you understand the information in there. Now, let's use Pinbar, the bullish Pinbar. Now, first of all, when we say Pinbar, what does a Pinbar mean? What is a Pinbar? A Pinbar is simply a candle, a single candle that is standing, whereby either the buyer or the seller overpowered the other. It's either the buyers overpowered the sellers or the sellers overpowered the buyers. Now, in the market, two people are involved, the buyers and the sellers, and the colors can indicate. On my chart now, the green indicates the buyers, while the red indicates the sellers. Now, the colors, some people say color does not matter, but it does matter. Why? Just know it for knowing sake. The color of a candle simply tells you this is the person that initiated the market. It's just like when you go to the market, you want to start pricing. Who is the person that established that negotiations before the two of you started dragging? That is what the color tells you. So when you see a color green candle just like this one standing, just know that it is the buyers that first step into the market and started bargaining. They are the one that initiated the transaction, and thereafter the sellers are now dragging with them. Same way, when you see a red candle, just know that it is the sellers that first of all initiated the transaction, and thereafter the buyers started dragging with them. So that's the essence of color. Just know it for the knowledge sake. Now, a bullish Pinbar. When we say a bullish Pinbar, what does it imply? It simply means a transaction was initiated between the sellers and the buyers, but at the end of the long run, the buyers won the market. The buyers won. Like, two people came into the market, the buyers and the sellers. One person must win. That is the market, because we have people that are losing, we have people that are winning. If there is no loser, there will be no winners. So that's the market for you, and that's why we call it liquidity. Market runs by liquidity. It keeps grabbing. So as it is grabbing liquidity, people are losing money. And once it grabs liquidity, the people it picks their order are the ones winning. So that's the market for you. So when we have a bullish Pinbar, it simply means two people came into the market, but the buyers won. The buyers won the race. Now, if you take a good look at this area here, you can see something like a hammer. Take a good look at it here. This is a hammer. It looks like a hammer, right? It looks like a hammer. A Pinbar is always one candle. It looks like a hammer. Now, what can you see? This is the opening of the candle. Market opened here. The candle is color green, first of all, which means buyers are the one that initiated the transaction. This is the close of the candle. Now, you can see that in a candle, we have the body and we have the wick, we have the opening, we have the close. These things are what you should know before now. So now, when you look at this candle now, it looks like a hammer. Why? Because the wick is more plenty, is longer than the body. The body is the price action. Let me draw it out. This is the area we have the body. And the body simply implies at the end of everything, this area is the only price action that was established in the market. So from here to here, so from this area to this area, this is the distance. This is the activities that happened in the markets using this candle. But then, from this level down is weak. There was no price information. Nothing happened. They were just dragging. They kept dragging. They kept dragging. And once they got to this point, the sellers now lost their momentum. They lost their power. They lost to the buyers. And then buyers were able to push forward the market, and then they closed here with their price actions. And that's made it a pin bar. That's why you call it a bullish pin bar. And with this bullish pin bar here, it simply tells us what? That the buyers are now winning in the market. And what does it imply? What does it imply to you as a trader? It simply gives you the signal that get ready to buy, get ready to continue to buy. The market will buy for a wow. Now, how do you use it as a confirmation entry, which is the purpose of this video? Now, for all candle patterns, subsequently, or let me say several times, 7 out of 10 times, I utilize 50% of the candle. 50% of the candle, at least 50% of the candle. That's what I use as my entry. So now that I have seen this pin bar and I've already read the information in it that the bullish people, they are the one in control of the market now. So I am ready to have a buy entry. So where is now my entry as a confirmation? Now this pin bar is already a confirmation that buyers will continue to buy. So now I want to enter the market. Where will be my entry? I will simply take 50% of the candle, which means half of the candle is what I'm taking. And that's what I will wait for and allow the market to come back, trigger me, and then move ahead. So that's how to take the pin bar as a confirmation entry whenever you are taking a trade. I take this for swing trades, and I also take it for my day trades. When I'm going for day trades, I do take my 3RR and leave. But if I'm taking for my swing trades, my take profit is going to be my technical TP I analyzed originally. Don't forget, you always have a setup. So this is more like how to confirm your trade, just the same way we did on change of character video. Now, this candle pattern, using it for trade confirmation, is it everywhere you see it formed that you go and be entering? No, don't make that mistake. It is not everywhere you see it that you go and start entering the market at 50%. No, these candle formations must appear at a key level. What do I mean by a key level? Key level simply means those areas that markets have opportunity to, retrace. The supply area, that's the supply zones, your demand zones, support level, resistance level, these 4 areas are key levels. These 4 areas are key levels. We have FVG. Yes, you have FVGs. And we have breaker blocks. So these levels in the market are key levels. So whenever you see the candle formations appear at these key levels, then that is when you can use candle pattern as a confirmation entry. Let me do another example now. So now when you come here now, this is a supply zone, right? This is a supply zone. Okay, we are using a bullish pin bar as example. So let's look for a demand zone. Okay, when you come here now, this is a zone. There is a zone here because we have a break of structure around here. So it left us with a demand zone, the last sell candle before the buy candle. So this is it now. This area is a key level. Why? Because it is a demand zone, a very relevant area market is expected to react. Areas that market is expected to react are where we call key levels, and these are the areas you should look out to see those candles before you think of entries. So now, this key level is a demand zone, is your opportunity area where you expect to take a trade. You are looking for a point of interest here. This is your trade opportunity here. Now, you want to enter, but you need a confirmation. That's where the candle plays a role. Now, you can see, first of all, this was the liquidity that market created. Market created the liquidity here, more like double bottom. Then on entering here, market gave us a pin bar. This is a pin bar here. Market gave us a pin bar here, the first pin bar. Now, ideally, you can see with the color red, simply means the sellers were the one that, they forced themselves into the zone, they initiated the transaction, but at the end of the day, buyers were able to push the markets forward, and then sellers lost their momentum. So you can see that the wick is always bigger than the price action. That's one way to know a pin bar. The wick is always longer than the price action. Now, this is the first pin bar that we got. So now, ideally, you can just bring your rectangle, take 50% of it. So first of all, you're taking 50% here. Don't forget, you always cover your low with few pips. With few pips. Now, this is the 50% of the pin bar. And don't forget, I told you, you are the one who knows your technical TP. And ideally, if I'm taking a day trade, I take my 3RR and I move. Now, if I place my long position here, let's see how many RR we were given. So market lead up to this area, we have 6 RR, which is a very great trade. 6 RR. So market that gave you 6 RR, you have gotten so much. So that is it. And you leave the market. So let me delete this. Okay, that's first opportunity. Now, if you check again, after market got to this point, we had a pullback again into the same zone. Don't forget, into the same key level, and then we saw the same bullish pin bar occurred. We saw another bullish pin bar occurred again. Now you saw the pin bar. The next thing that you should ask yourself is it in a key level? Of course, yes, it is still in our zone. That is a second trade opportunity. Bring your long position, place it at 50%. That is your entry. The pin bar is already your confirmation entry. Then 50% is your entry. Wait for what market will do. And as we can see, this was the 50%, and market came here to mitigate us and then move ahead. So let's see how many RR market did before reversing. So market got to this level before reversing. So this was it. This is the level market got to before reversing again. How many RR do we have? 11.98, almost 12 RR. You can see how beautiful it is. So that's how to use pin bar as a trade confirmation to take your trade. Now you can see I did not just take it randomly. I made sure it was at a key level, and I watch out to see the candle that will form. Already I know what it means when a pin bar occurs. I don't need anybody to explain that to me. So I take my 50%. Now on this demand zone, I've taken 2 trades. First one 6 RR and the second one 12 RR. That makes 18 RR. A good trade. A very good trade. So guys, that's how to use candle as a confirmation type to have a trade entries. So that brings us to the end of this video. You can go ahead and look for a bearish pin bar and use it as your example. If you are very serious and intentional about learning, you can drop your exercise in the comment section. Let's look into it. And that brings us to the end of this video. If you find value, don't forget, share this content. If you have not subscribed, endeavor to subscribe. That is the only way I will be appreciated and get encouraged to dish out more free content. Don't forget, it's a free content, but it is real value. These are one of the things you pay heavily for. somewhere else, but now you are getting it for free. So endeavor to appreciate by subscribing to this channel, like, comment, drop your views in the comment section. It will help the algorithm to grow. And then do not forget to share this content. Thank you for staying till this moment. I will see you in my next video.